Okay, let's unpack this. We're looking at Rekor Systems, ticker REKR. Now, here's a company operating right at that, really exciting intersection of artificial intelligence and transportation.
Definitely. They pitch this vision of safer, greener, more efficient roads. It sounds great on paper.
Totally. But then you start digging into the details, the financials, the stock performance, and it suddenly feels like, well, like a tech mystery unfolding.
Uh-huh. You see these pretty significant financial headwinds, a stock price that's, frankly, all over the place.
Exactly. So what's really going on with Rekor Systems? And maybe more importantly for you listening, what should you make of this whole situation?
It's that classic tension, isn't it? You've
Yeah.
got this really compelling futuristic vision driven by AI versus the, let's say, hard realities of actually building a profitable business in a market like this.
Right. And that's why we're doing this deep dive today. We've got our hands on a comprehensive Rekor Systems deep stock analysis document dated today, May 11th, 2025.
And it covers the whole spectrum. The business itself, the management moves, the financial health, market sentiment, who owns the stock, the risks, everything.
Our mission really is to pull out the key insights from all this information so you can get a handle on the core story behind Rekor. And just a reminder, all the source details are linked down in the description.
Yeah, looking at a company like Rekor, it kind of gives you a window into how these new technologies are actually getting adopted or struggling to get adopted in, essential infrastructure sectors and how investors are weighing the odds.
All right, let's jump right into chapter 1. Understanding the business. So at its core, Rekor is all about using AI to figure out what's happening on our roads.
Yeah, they've got this integrated approach. It combines their software platforms, Rekor One is the big one, with their own hardware, the Rekor Edge systems, plus this developer ecosystem.
And Rekor One, that's like the central AI brain, right? It's
Yeah,
designed to gather just tons of mobility data from all sorts of places.
exactly. Their own sensors, cameras, data from partners, existing infrastructure. It pulls it all together. The idea is, by analyzing this massive data set, they can find insights you just wouldn't get otherwise.
Which brings us to that idea of a data network effect. The more data Rekor One gets, the smarter it becomes.
That's the theory. More data makes the AI better, which makes the platform more valuable, which attracts more users and data sources, making the AI even smarter. It's a potential competitive advantage if they can really get that flywheel spinning.
Kind of like how Waze got better with more users, or maybe even how Palantir works with complex data sets in other fields. It suggests huge potential if they nail it.
Precisely. If they build that self-reinforcing system, it could create a real barrier for anyone else trying to jump in.
Okay, so what about the specific software? There's Rekor Discover for urban mobility analysis, Rekor Scouty for public safety license plate recognition, and hey, that just got certified in New Jersey. That sounds like a win.
It definitely is. That certification is validation, and it opens up a specific, pretty important market for them.
And then Rekor Commandy for managing transportation, using AI to help make decisions.
Yeah, things like helping prioritize emergency responses.
Yeah.
It shows the practical, potentially life-saving side of the tech.
And it's not just code in the cloud. They have the Rekor Edge hardware, the Max Flex Pro devices. These are the actual things out on the street collecting data, doing LPR.
Having their own hardware gives them more control, lets them optimize data collection for their AI. Plus, Rekor Scouty can work with existing cameras too, which gives them flexibility.
Then there's the developer ecosystem SDKs, APIs like vehicle recognition, Rekor Car Check, Auto Notice. This feels pretty strategic.
Oh, absolutely.
Yeah.
By giving developers tools, they're not limited to just their own ideas. They can get their tech embedded in way more places. And crucially, it potentially feeds more data back into Rekor One, boosting that network effect.
So, putting it all together, Rekor is aiming to be more than just a vendor. They want to be the provider of the digital infrastructure for future smart roadways.
Right. And the appealing part of that vision is the potential for long-term recurring revenue streams. That's something investors generally like to see, especially compared to relying on big, one-off government contracts.
Okay, let's shift to chapter 2. Management evaluation. Things have been pretty dynamic on the leadership front recently.
Yeah, a bit of a shakeup.
Right now, Robert A. Berman is the interim president and CEO. He's been CEO before, so he knows the company. Then you've got CFO Isle Hen, CTO Christopher Koddock, EVP Charles Degliamini, and CRO Mike Dunbar.
Kind of a mix of familiar faces and ongoing roles, which isn't too surprising during a strategic shift.
The big news, though, was the CEO, David Descharnay, resigning back in March 2025. This happened right as they announced the strategic realignment and the board formed an executive committee.
Yeah, that executive committee usually signals the board stepping in more directly, especially when there are big changes or challenges.
And then Berman steps back in as interim CEO. His background is in finance, M&A, turnarounds. He was CEO of Empire Resorts. But, and this is the interesting part, during his last stint as Rekor CEO, the company grew revenue, but it didn't make a profit.
It's a bit of a double-edged sword, isn't it? He's got relevant experience for a turnaround, finance restructuring, but the track record on profitability last time around is definitely something investors will be watching closely.
Also worth noting, the annual stockholders meeting is coming up fast, May 15th. They'll be voting on directors' executive pay.
Those votes can be a kind of temperature check on how shareholders feel about the current leadership and strategy, particularly after recent changes.
So this strategic realignment from early 2025, what's the goal? Basically, speed up revenue growth, cut operating losses significantly, and rely less on raising outside cash.
And they're focusing their efforts now primarily on Rekor Scouty and Rekor Discover.
Seems like they're trying to narrow the focus, concentrate resources where they think they can win faster.
Exactly. Streamline operations, focus on the path to revenue.
And to help the bottom line, they did some cost cutting. Voluntary pay cuts for employees taking equity instead of cash, and also some workforce reductions.
Which saves cash immediately. That's the plus side.
But the downside is potential dilution for existing shareholders later on, right?
That's the trade-off, yeah. Issuing more stock can dilute everyone else's slice of the pie, especially if the stock price is low. It really highlights the tight spot they're in financially.
They're also shifting strategy away from relying so heavily on those big, sometimes unpredictable government contracts. The push now is for a more predictable revenue base with this pay-for-data model.
That sounds potentially more stable over time, though the challenge there is constantly proving value to keep clients paying, maybe unlike a sticky long-term government contract, even if those payouts are lumpy.
True. The pay-for-data model could lower the barrier for entry for governments, maybe speed up adoption, and create a steadier income stream tied to data value.
Right.
But even with cost cuts, they're still investing in R&D. Analyst projections actually see R&D spend increasing, maybe?
Which they almost have to do, right? For a tech company like this, innovation is key to staying competitive. You can't just cut your way to future growth.
It's a balancing act for sure. And that need for capital, it's still there. They set up an at-the-market or ATM agreement recently, lets them sell up to $25 million in stock gradually.
It's a flexible way to raise cash as needed.
But, again, potential for more dilution, especially if they sell shares when the price is down.
Yep, that's the risk with ATM offerings. It can weigh on the stock and investor sentiment.
Okay, Chapter 3, Financial Health. This is where the rubber really meets the road, financially speaking.
Let's look at the numbers.
For fiscal year 2024, revenue grew to $46 million. That's up 32%, which sounds pretty good.
Is decent growth, yeah.
But the net loss widened significantly to over $61 million. Now, part of that was a one-time impairment charge, like writing down the value of an asset.
Right. Recognizing something on the books isn't worth what they thought. Still, a big loss.
And their adjusted gross margin actually went down a bit. Adjusted EBITDA improved slightly, though.
So it's a mixed bag. Revenue growth is positive. Widening loss despite that growth, that's the main concern. It means costs are still way ahead of income. The slight EBITDA improvement in Q4 might show cost cuts are starting to work, but it's just one quarter.
Looking just at Q4 2024, revenue kept growing, adjusted EBITDA loss got smaller, which is good. But the net loss was still huge because of that impairment charge.
Yeah, Q4 continues that mixed story. Progress on operational costs, maybe, but profitability is still a long way off, and that impairment highlights ongoing financial pressures.
So the key takeaway from the metrics seems to be revenue growth needs to start consistently outpacing cost growth. That widening net loss is the big red flag. And that little EBITDA improvement, we need to see if that's a real trend.
You nailed it. Sustainable improvement depends on getting costs under control relative to revenue. The trajectory of adjusted EBITDA will be really key to watch.
Now, what about debt? The analysis mentions various loans, and the debt-to-equity ratios seem to vary a bit depending on how you calculate it.
The takeaway is they do carry a fair bit of debt relative to their equity, which adds financial risk, especially since they aren't profitable yet.
On the plus side, they did fully pay off that balance with Yorkville Advisors in late 2024.
That's definitely a positive step. Reduces one source of debt and potential interest costs.
And liquidity. Cash on hand was about $10.6 million at the end of Q3 2024. The current and quick ratios suggest their short-term liquidity buffer is pretty thin.
Yeah, that cash level and those ratios indicate limited wiggle room for meeting immediate obligations. It reinforces why they might need to keep tapping that ATM facility or find other funding.
And the cash burn. It's significant. Negative operating cash flow, negative free cash flow. Analysts expect negative free cash flow to continue through 2025.
Which basically means they'll likely need to keep raising capital just to fund operations.
That's not sustainable long-term, is it? Constant capital raises mean ongoing dilution risk.
Exactly. It underscores how critical it is for them to reach profitability.
So, the million-dollar question, what's the path to profitability? Their whole strategy is focused on cutting losses, getting to break even. Success hinges on those focus products, Scouty and Discover, and making models like pay for data work.
That's the whole ball game right now. Can they successfully market and sell those core products? Can they scale the pay-for-data model effectively? That will determine if they can actually make this turnaround happen.
And finally, on intrinsic value, what the company is really worth. Traditional methods based on earnings don't work because, well, there are no earnings.
Right. Metrics based on sales or book value give you some numbers, but they don't tell the whole story for a company like this.
And that negative return on invested capital, that's not great. It suggests they're currently destroying value, not creating it, with the capital they have.
It really does sound like REKR is primarily a story stock right now. Its value is tied much more to future potential and executing the plan than to current financial performance.
And that huge gap between the current stock price and where analysts think it could go, that just screams speculation, doesn't it?
It absolutely highlights the speculative nature. Those targets depend entirely on future success that's far from guaranteed.
Okay, let's move into the second half, starting with Chapter 4, Market Sentiment. How does the market feel about REKor?
Well, analyst coverage is pretty limited, not a ton of firms following it. But those who do, they seem generally positive ratings like strong buy or moderate buy.
But with a small number of analysts, you have to take that with a grain of salt, maybe.
Definitely. It's encouraging, but might not reflect the full market view.
And their price targets average around $4 to $4 to $4.50. That suggests a lot of potential upside from where it is now.
Huge upside if they execute. Those targets bake in a lot of optimism about the turnaround plan succeeding.
Okay, now, short interest. This is where it gets really interesting. It's exceptionally high. We're talking over 20% of the float.
Yeah, the float being the shares actually available for trading. Over 20% short is very high. It means a lot of investors are betting heavily that the price will fall.
That signals strong bearish sentiment, likely driven by all those financial challenges and the strategy questions we've been discussing.
Absolutely. It's a significant chunk of the market essentially saying, we think this is going down.
And the days to cover is around 5 to 6 days. So if good news hit and shorts wanted to buy back their shares,
it could take them almost a week, on average, based on current trading volume. That creates the potential for a short squeeze.
Right. A rush of short sellers buying could push the price up really fast.
Potentially, yes.
Yeah.
That high days to cover makes a squeeze more plausible if there's a strong positive catalyst.
We also see high off-exchange short volume. Does that tell us anything specific?
It can sometimes suggest more institutional or sophisticated short-selling strategies at play, happening away from the main public exchanges. Maybe larger, more deliberate bearish bets.
Okay, but then you look at the options market, and the put-call ratios are actually low. More calls being bought than puts. That usually suggests bullish sentiment, doesn't it?
It does, typically for the shorter term. It's an interesting contrast to the high short interest. Maybe it's traders speculating on a short-term bounce or even trying to play a potential squeeze?
So a disconnect between the stock shorters and the options traders.
Seems like it. Or at least different time horizons or strategies at play.
And the implied volatility in the options, through the roof.
Extremely high, which just reflects massive uncertainty. The market is pricing in the possibility of very large price swings, up or down.
We also saw a lot of options activity around the $1 strike price for near-term expirations.
Yeah, that can sometimes indicate a level that traders see as significant, maybe a support level, a target, or just a focus point for near-term expectations.
And just looking at the stock chart, big decline over the past year and year-to-date 2025, recently trading in a tighter range maybe, but the 52-week high and low show just how wild the ride has been.
That price drop reflects all the concerns we've talked about. The recent range might be consolidation, as investors wait for more news, like those Q1 earnings.
Key news recently has been the FY24 results, the CEO change, the realignment plan, some patent awards, partnership updates.
All contributing to the volatility in the market, trying to figure out what this company is worth.
But here's something really unusual. There's a disclosure that a single participant at the DTC, the Depository Trust Company, holds about 14% of Rekor's shares.
Wow.
But there's no corresponding filing saying who the beneficial owner is, which is strange for a stake that size, right? Usually over 5% requires a filing.
Yeah, it's highly unusual and introduces a lot of uncertainty. It could be anything an activist investor building a position quietly, a large fund, someone planning an acquisition.
And Rekor itself has flagged this to the SEC and FINRA.
Which tells you even they think it's significant and potentially irregular. It's a major question mark hanging over the stock right now.
Okay, let's move to Chapter 5, ownership structure. Who actually owns Rekor? Institutional ownership is moderate, maybe 42–47%.
Yeah, suggesting a mix of institutional and retail investors influencing the price. Recent activity shows slightly more institutions adding shares than selling, which is maybe a cautiously positive sign.
Key holders include Arctis Global LLC, they have over 10% and have been buying more. Plus big names like BlackRock, Vanguard, Goldman Sachs.
That Arctis Global stake is notable. A significant institutional investor actively increasing their position shows strong conviction, which can be a positive signal.
And insider ownership looks pretty high too, maybe over 20%. What about insider trading?
Mostly purchases, actually.
Yeah.
Key insiders like Berman and Arctis again have been buying. There are share awards too, of course. Sales seem mainly to cover taxes.
So insiders putting their own money in, that's usually seen as a good sign, right? A vote of confidence?
Generally, yes. Significant insider buying aligns management with shareholders and suggests they believe in the company's prospects. Tax-related sales aren't usually seen as bearish.
All right, Chapter 6, risk assessment. Let's do a quick SWOT analysis. Strengths.
Proprietary tech like Rekor One, patents, big market opportunity, partnerships, growing recurring revenue base, their brand positioning.
Weaknesses.
Consistent unprofitability, high cash burn, reliance on government contracts, though shifting. Management instability recently, need for financing and dilution risk, margin pressures, stock volatility,
Opportunities.
strong market growth in instant AI for transport, potential for new contracts, product expansion, success of the realignment, maybe more infrastructure spending, international expansion,
And threats.
intense competition, funding needs and dilution, changing regulations and data privacy concerns, tech becoming obsolete, economic downturns, high implementation costs for customers, supply chain issues, and tariffs. That last one, tariffs, feels particularly relevant right now.
Yes, let's zoom in on that for Chapter 7. The potential impact of U.S. tariffs, especially those possibly hitting 125% on some Chinese imports in 2025. This looks like a tangible risk for their hardware business.
Absolutely. Increased component costs would directly pressure their gross margins on the Rekor Edge hardware.
Which creates a pricing problem, doesn't it? Absorb the cost and hurt profitability more, or pass it on and potentially lose sales, especially to government clients with tight budgets.
Exactly. Passing costs to governments with fixed budgets is often very difficult. Plus, tariffs could force supply chain changes, finding new suppliers, redesigning products. That takes time and money.
And could put them at a disadvantage if competitors aren't hit as hard by these specific tariffs.
Right. Even with the software focus, the hardware is often what enables the software sales and data collection. It's all connected. These tariffs are a significant added headwind to their turnaround effort.
So wrapping this all up, Rekor is a complex story. You've got this promising tech in a growing market.
But weighed against really significant financial and execution challenges, that strategic realignment is absolutely make or break.
And now we layer on this tariff risk, potentially hitting their hardware margins and operations pretty hard.
It really reinforces the takeaway. Rekor is a highly speculative investment right now. You need to watch their progress towards profitability and how well they execute that strategic plan very, very closely.
That upcoming Q1 2025 earnings report, it's going to be crucial.
Definitely a key data point. But maybe the biggest immediate question mark, the real cliffhanger here, is that mysterious 14% stake held by that unknown DTC participant.
Right, what does that mean? Could it be a game changer? Activist, acquirer, a massive fund making a bet.
We don't know, but it's absolutely something you'll want to keep a very close eye on going forward. It adds a whole other layer of intrigue.
And that's all the time we have for this deep dive. If you found this breakdown useful and want more analysis like this, definitely subscribe to the Stock Analytics AI YouTube channel.
Lots more insights and deep dives over there. And just a standard reminder, This was all for informational purposes. It is definitely not financial advice. Investing involves risk.
Absolutely. Do your own thorough research. Talk to a qualified financial advisor before making any decisions. This analysis used publicly available info and may incorporate AI tools. We can't guarantee its accuracy or completeness.